Hey guys, Value Venture Investing here. So today we're going to be talking about pot stocks. Specifically, I'm going to be giving you my recommendation on what you should do with these stocks, what I think is going to happen, and more importantly, I'm going to let you know a stock that I think is extremely undervalued and has huge potential. But first, let's look at what's been going on lately. You've probably heard of these companies. I picked these ones because these are the main big ones, the ones that I think are going to last longer than the other ones, although there is a myriad of other ones as well. You could own all of these, or not all of them, but a good proportion of them with an ETF. I did a video on this one a while ago that tracks them all, so that would be my recommendation if you don't want to get in any one of these, but I have a better recommendation that's coming on the end of this video, so keep watching. So let's look at what's going on here. Canopy growth. Okay, year over year, we've seen this thing go up over 100%. This has been one of the big ones, right? The revenue that they've had in the last quarter, though, is only 25 million, and they've had a loss of $80 million. That's pretty huge. And this company's got a $15 billion market cap. Aurora, 330% year to date. They made $16 million revenue and lost 19 last quarter. And they got a market cap of 11.3 billion. The next one is Afria. It's up 193% year to date. They made $12 million and lost only 5. Of the companies that are up here, I think this is probably one of the better ones. They have a massive market cap of 44 billion, but their financials are a little bit better. Tilray was a big one that we've all been talking about lately. We saw Tilray skyrocket a couple days ago, and what that was to do with was the fact that there's such a low float. There's an insider that owns something like 75% of the company, and there was a short squeeze in this skyrocket. It absolutely skyrocketed. But what you see now is the last couple days it's dropping 25% a day. I think today it's down another 25%. That's to be expected, but still, year over day it's up over 485%. I mean, that's crazy. And this is a company that's only made $9 million in revenue and has lost 12. Huge market cap on that too. 16.4 billion for a company that's making $9 million a quarter is stupid in my mind. So you might be asking yourself, you know, how do we value these? It's easy to look at these in the price to earnings ratio, right? If you're not too sure what that is, the PE is the stock price divided by the earnings per share. So now all these companies, some of them I think have had them from time to time, but as of right now, none of these companies have earnings per share. So how can we project out into the future what might happen? So it's kind of expected that this could be a $200 billion a year industry in terms of the revenue that comes with these companies. So if you expect that only a couple of them stick around, I think it's kind of reasonable, although a bit of a jump, to assume that maybe they can be making $50 million a quarter net income. It's possible. Then again, it's not possible as well, but I thought it was a good starting point to put all these companies in with that assumption that they're making $50 million a quarter net income and see the valuations. Of course, they have different profiles. Some of them have bigger market caps and they might have more of the market and whatnot, but at least if you look at it from this perspective, you can see what's expensive and what's not expensive. Otherwise, how do you know? And I'm going to do a video on PE and stuff like that more in the future. If you want to see that and see how I did this valuation, make sure you leave a comment down below. So based on that $50 million, right now, if I take a forward PE, meaning the next 4 quarters, I assume they're going to make $50 million net income. Based on the number of shares they have outstanding and the stock price, you know, this formula here, 65 times earnings. That's expensive. And that's assuming $65 million in net income to a company that's lost $80 million. But we'll stick with that assumption. Aurora, 22 times earnings. Not awful. Afria, about 16 times earnings. That's again why this is probably going to be one of my picks if I were to pick in this set of them other than the one I'm going to tell you in a little bit here. Tilray, you knew what was going to happen here. 50 times earnings. That's a bit insane. So the question is there a better alternative? I think there's an extraordinary opportunity aside from just buying an ETF that tracks all these. This company, year over year, it's up a lot. I actually did a video on it a while ago. It's up almost 200%. The revenue, though, they made $42 million in revenue. I mean, that trumps the revenue on any of these. And they've only had a loss of $2 million. They actually have had some positive earnings from time to time as well. But as of right now, they're showing a loss. Their market cap is 351 million. Notice the difference there. Million. These are all billions. The market cap is teeny, less shares, smaller stock price. If I do this EPS with the $50 million, which I think this company is just as likely to have as all these, you are seeing that right. That's a 1.7 PE. So what does that tell you if it's 1.7? versus all these 65, 50s. That's telling you that this company's stock price is ridiculously cheap compared to these with that level of net income coming in. So what company is it? You're probably wondering, you might have figured it out already. It's VFF. Now this is on the Toronto Stock Exchange. It's called Village Farms. And there's some really interesting things with this company. The main thing is that VFF is already in the space generating revenue. It's $42 million. Basically what they are is they're a greenhouse company that has invested in marijuana somewhat. I'm going to show you that to you in a second here. What they mainly sell now is cucumbers and tomatoes. So let's look at a couple things right now where we can check out the profile of the company and give you a little bit more information about what's going on. So this is just a basic view of the company here. This isn't too important. I mean, they've been in operation for 30 years. They have a huge amount of experience, advanced technology, blah, blah, blah. Just a little bit of information. As you can see here as well, they're a vertically integrated provider of premium produce to grocers across North America. So like I said, they have tomatoes, they have cucumbers, and that's basically what they've been generating the revenue on right now. So here's a map of where they're at. So we have BC Grown here. So they have 3 facilities with over 110 acres in BC. The big one here, they also have one is in Texas, which is pretty big, one in Ontario, and one actually in Mexico as well. So the big thing with this company is that they've partnered with a good partner. The partner that they partnered with is Pure Farms, Pure Sun Farms rather. And what this is this is a company that's decided to go 50-50 in their joint venture with some of their existing greenhouses that they have already, Village Farms that is, to get into the marijuana market. So as you can see here by this slide, Village Farms and Emerald, that's the Pure Life, Pure Sun Farms, they went 50-50 deal on this. So Emerald has invested $20 million cash, and Village Farms has basically supplied the technology, the low-cost greenhouse growing and whatnot, right? And this is something that I think is going to be extremely important, is to have the know-how how to do these. I mean, some of these companies, you know, they're kind of new to this. Village Farms has been around doing this for quite some time, and they have the expertise, the locations, and the know-how how to do this. So here you can see a little bit about, you know, the quadrants that they have. I'm not going to get into the specifics about this too much because it's not really important unless you're really following this company. But basically they have a timeline here how they're going to do it, 2017, 2018, 2019, and 2020. And they have the targets that they want in terms of the amount of marijuana that they can have. As you can see, they are on track, and by 2020, they're hoping to have about 75,000 kilograms. So they expect the entire 1.1 million square feet of just one of the facilities to be in production by the end of this year as well. So here you can see some of their facilities in British Columbia in Canada here. They expect that the demand would be about 734,000 kilograms by 2021. Now this is the key point. This is why I think that this company has just a good value proposition as the other companies. They have the estimated capacity of 310,000 kilograms. So that is like nearly half of the whole market that they could supply. And you can see that some of the greenhouses they hear that they convert. Another key point is that their Texas one could be converted when the legislation becomes federal. They want it to become federal in the States. Then they could be a supplier down in the United States as well. This is a huge competitive advantage, already having this facility down there, and it's a huge facility. So as you can see by this little statistics here, they actually compare it to the other companies, where it be canopy growth, you know, the ones that I've outlined up here, and they show that the existing capacity and then the future capacity as well. And only canopy growth is really one that could triumph it, and it's trading at 65 times earnings. But VFF and its joint venture could be pretty much the second biggest, if not one of the biggest, suppliers of marijuana. So we talk about the future, like I use the figure of $50 million as something the net income that they can have. It seems a bit insane, it seems a bit high to me. I did a high figure just to demonstrate a point. But if you look at this slide here, we're actually seeing that by 2020, which is not very far away, guys, we're almost there. They're looking at, depending on the price, at $6 a gram, $4 a gram, or $2 a gram. I mean, they could have $150 million just go to Village Farms. You know, if it was $4 a gram, they could have $450 million go to Village Farm. And so these numbers are, they're pretty realistic. If things take off, that's a huge, that's a huge chunk that they could supply, and that's a huge amount of money. And what I find so amazing is that when you look at this company, look at the valuation. It's at 1.7. It has, arguably maybe it doesn't have as much potential as some of these. Some people could argue that. But why would you own any of these companies when you could own VFF at a valuation like that? Small number of shares outstanding. And even if these things fail, say we have a big hiccup with marijuana, right? What's left over? This company still has this underlying business of tomatoes and cucumbers. So you're taking a big risk when you invest in these companies with the same reward, or I would say less reward than this company, given the valuation. And if these ones go nowhere, go to pot, so to speak, you could lose all your money, or you could lose a huge proportion of your money. Whereas here you have a little bit of a safety net. So I think that the potential in this one, at the valuation that it's at, is insane. You could see this thing double, triple, or even more, I think. Whereas the likelihood on these ones, I think you're going to see them fall back a little bit. So anyway, that was just a quick analysis. I hope that it made a lot of sense. If you had any questions on this, feel free to leave a comment down below. Make sure you subscribe, and I'll see you guys in the next one.